Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. What a morning, folks. The jobs data just hit monster numbers. Huge beats on the unemployment rate in terms of coming down 0.1%. Again, it was expected to be 4.2%. It came in at 4.1%. And check this out. The non-farm payrolls, 254,000 jobs created in the month of September versus the 147,000 expected. Let's go over and see what the markets are doing, guys. Let's get right into the nitty-gritty here. All right, so what we have is you can see the S&P pre-market here surging to the upside, big move to the upside here. Now, interestingly enough, this is a positive number to the aspect that basically what we're seeing here is the market saying we prefer a strong economy versus a weak economy. So yes, it means less rate cuts, and we'll look at the Fed watch tool in just one second, but it ultimately is a positive, a net positive for the market here. So here's our numbers, guys. Check this out. Like if we look at this right here, we have 254,000 versus 147. We have 4.1% versus 4.2%. Now, the only caveat here, and I hate to have to bring this stuff up, but you do know, everyone knows we have an election in 1 month. What were the odds that this number was going to be horrible? Not very high. What was the odds that the unemployment rate wasn't going to be solid? Not very high. So, listen, it'll be interesting to see. We all know, listen, doesn't matter what side of the fence you're on, we all know that the revisions come and come and come, right? So the question is, next month or the month after, what type of revisions do we see on these numbers? We'll have to watch and see. All right, couple other things here going on here, folks. Number one, we could take a look here at a couple charts. Let's go to the daily S&P chart. If we bring up this and let's erase that, we have a couple levels to watch today on the spiders. So the first level to watch is going to be right here at 574.50. That's that previous high right here. Notice we backed off. Look at where we found support here, right at this previous high. This was the previous all-time high until we broke through it. Now we came back in, and now we're pushing back up. Remember what I've said, folks. There is a decent chance that the market wants to go to 6,000 before we see any sort of major pullback in the market. And we're not that far away. We'll be about 4% away from where this market opens today. And we're not going to get there today, but maybe next week, maybe a couple weeks from now. It's very, very possible we'll get there. Take a look at the U.S. dollar here. The dollar is ripping. Look at this move to the upside on the U.S. dollar here. A monster move up. This is the daily chart. So today, again, this is 1, 2, 3, 4, 5 up days in a row. The only thing I'll point out here is that, it almost looks like someone or some players knew about this strong data ahead of time as the dollar was already soaring. And again, where are we going to go, guys? You guys know this play. This is a classic retrace to the scene of the crime. If you're looking for upside to short the dollar, that's your target right there. All right, so you're looking at a move back to about 104.85, 105. And I'm not saying it's going to get there, but if it does, we know what to do, right? We would then short the dollar, and that would be where you would buy gold, buy things that obviously go up on a weak dollar scenario. So keep an eye on that. If we go to the 10-year yield, the 10-year yield had this beautiful downsloping channel. It's breaking out here. Where would a retrace to the scene of the crime be right here? Well, very standard. You would look for the move up. So you're looking at, imagine if rates go all the way back to 4.3% before then turning back lower. But right now, again, the economic data has been very, very strong this week. And what that does is it puts people in a jovial mood. The economy's doing okay, even though we know at least half the country is struggling ridiculously. But as long as, again, these headline data points are strong, the investing public is going to keep buying stocks, which gives those big institutions that amazing exit liquidity to that $6,000 level. And again, gotta love that little checkerboard behind me that pops up every once in a while. Okay. Next up, let's talk a little bit about some various other areas that are showing strength. If we look at NVIDIA, watch this on NVIDIA, guys. So what do we have here on NVIDIA? We have a wedge pattern, and NVIDIA today is going to try to break out of that wedge pattern. It opened above here, got rejected, came up yesterday, hammered it. If we go to the pre-market data, NVIDIA is trading around 125 in the morning session, and again, that would put us right up here on the day, so we'll watch to see where that closes. Now, come back to me right here. I want to talk to you guys about one thing. So even though the markets are up a lot today, or not a lot, but we're up about 1% or give or take, that what I want you guys to remember is that there could be end-of-day selling. Now, you might say, well, how does Gareth, why would he think that there could be end-of-day selling? And the answer is this, is that we're still waiting for a response militarily from Israel against Iran. And so if you're an investor and you've seen the markets go up nicely on the day, come midday or early afternoon, how many people are going to say, yeah, I'm in the money nicely, but let me roll the dice over a weekend when I can't sell my positions and just hope that Monday comes and nothing crazy has happened. And so again, I expect today a late day fade based on what could happen, the fear of what could happen over the weekend between Iran and Israel and any potential additional escalation. All right, so watch for that, guys. Now, are there trading opportunities today? The answer is yes, there are. One of my favorite trades, and we'll walk over here to the big board here, look to short today, and this is more of a swing trade idea, but look to short VST. VST is a utility. All right, so one of the things you have to keep in mind is that we've seen utilities. I mean, this stock literally is up almost 100%. It's up pre-market around 136 last I checked. But the idea is that we've seen a substantial move up in utilities as money has flowed in to the safety of utilities. And the question is now that we're seeing a stronger economy, at least in the near term, and I'm saying that with, yes, it's a stronger economy per the data. Do I truly believe it's going to last? I'm very suspect, as you guys know. But the idea is that you should see a retrace on these utility plays because there's no reason, based on the current data, for people to be buying in, especially when they've had this type of run to the upside. So keep an eye on VST. That's Vistra Corp. Look for it to potentially pull back just a little bit in the coming days, assuming the data stays relatively strong. All right. Another play that I like here, if we go over to the computer, we can take a look at, I am very intrigued by WBA here. I think I've talked to you guys about this one before. It's not that the company is that great, right? It's the company has a lot of debt. Needless to say, Walgreens is struggling. But when I look at a chart like this and I see this type of wedge pattern that's condensing more and more, it's creating kind of this ball of energy. And if it can break out above this level, you get one of those big moves to the upside. So watch Walgreens down here. And by the way, this isn't a company that I'd be like, oh, I love it for the long term. I love it as a long-term investment. No, it's more of a swing trade. It's the idea that if we can get a break above that $9 level there, then you get that momentum to the upside as it's been beaten down. I mean, it's literally down 66% on the year this year alone. And so again, the company has issues, there's no doubt about it, but the question is there a reversion trade here based on, again, the economy being a little stronger? Maybe that helps kickstart some short covering, maybe a little bit of a pop there. All right, so that's another idea that I have for you guys out there. All right, let's look at a couple of these other ones. I mean, you got to just talk about Meta. Incredible pre-market. The stock is trading near 187. And if we look here at the daily chart, it is at the higher end of a major trend line range here. So just be aware on that. But again, this is a stock that just continues to defy gravity and clearly wants to try to at least touch that $600 level. So incredible move on that one. Let's look at gold here. Let's take a look at gold on the chart. So what do we know about gold? Gold usually goes up when the dollar goes down. Well, the dollar's up today. Therefore, gold is down. You can see here, if we go back to the chart, nice dump on gold, and now a little bit of a bounce back. Nonetheless, it's not really dropping that much. But again, just keep an eye on here. Remember that I had this big level with you guys going back all the way on my logarithmic chart, all the way back to 1980. So it makes sense that we might get that pullback in gold here. Also because, remember, gold is a defensive asset. If everyone is starting, and listen, when I say everyone, not everyone's going to jump on the bandwagon. I certainly am not going to jump on the, oh my goodness, this is a perfect landing. The Federal Reserve has engineered a perfect scenario of no recession ever again. I don't buy that one bit. But per the general public, that could be some situation where they say, okay, well, let's sell gold and put money into tech, for instance, which is doing very, very well today. So we'll see if we're going to get that pullback. Right now, we do have a pullback on gold, only about a $7.50 pullback, but nonetheless, it is coming back in. Now, on the other side, we have silver. And silver, again, remains basically in an alignment. It's doing okay today. It's not getting a major move here. Let me just zoom in on the chart here. You can see it's basically flat. And so what that tells me also is that people are a little concerned about the economy, even with the headline number. And probably a lot of people, just like me and you guys, are like, yeah, 254,000, sure, that's what it was. Oh yeah, like we all expect revisions down. So that could be why silver is underperforming on the chart here. And again, we are seeing it just down slightly on the day. One other chart I wanted to show you guys is the URA chart. So I know a lot of you guys are buffs out there that love your uranium. And again, this has been a great move up, but look at this retrace to the scene of the crime. We should see a pullback on uranium, on the URA, the uranium ETF, back to the midpoint of the W. That's how you figure out your most likely target. You have your W pattern, which is bullish. Then you get your pullback here, and then your next leg up can come in, but you usually get a pullback. So again, that would kind of work in the same vibe as shorting some of the utility stocks that have just gotten way, way too overdone to the upside. Look for those to come back in over the next week or two, like a VST. All right, let's go to oil. Oil obviously is the big one here, guys. If we look at oil, it is pushing up, but look at how it's not really getting that much of a bid today. If we jump over to the chart, one of the things I'm going to watch for here is whether or not we confirm today. And if we confirm, this is going to be your upside target right here. This is a trend line that's connecting the previous highs, and that's right around $80 a barrel, right? So we just have to keep that in mind, is that if it does confirm, it does open the door to potentially going to $80 a barrel. I still think ultimately the performance of oil is very indicative of a weaker global economy in spite of all the stimulus that China's done, these U.S. economic numbers. Again, it could go up there on fear, but as soon as whatever is going on in the Middle East may subside, I don't think there's downside. In fact, I would say this is your max move upside. All right, now again, max move, is there a chance it goes higher? There's always a chance. But if it got up here, I would be heavily shorting oil at $80 a barrel. Because remember, the U.S. is independent now, energy independent. We are producing a massive amount of oil, really dwarfing what was coming out of the Middle East at this point. So you don't have the same impact that you would have had 20 years ago when there was stuff like this going on in the Middle East. All right, so again, let's watch to see what oil does today here. I could see it holding up, and because of the fear over the weekend of escalation, maybe even Sunday night it opens up at 80, but then you got to be ready to short it if you have a futures account and you trade oil. All right. Let's go over to a couple other charts here, guys. Let's take a look at what Bitcoin is doing this morning. Bitcoin today is inching up, so it is, notice this right here on the chart, it is holding this pivot line. Remember, this is a major level. Why is this pivot line, bullish bearish pivot line, major? Because it confirmed above it. Closed above, confirmed above. Therefore, this is most likely a major level, and it is holding price. Now, again, it could go up and eventually hammer on it and break, but right now the path of least resistance is back up on Bitcoin, and what we're seeing in the markets is risk on right now, and risk on is very, very good for Bitcoin. And that's the only thing I keep saying is I continue to love Bitcoin, the idea that eventually it morphs into a digital gold, a safety asset. It's not there, not even close. In fact, it's more correlated to the stock market than almost any other time in history per the price action over the last few months. So just keep that in mind. And I've always said that my biggest fear for Bitcoin is that at some point the stock market really does take a nosedive, and that could really crush. I mean, remember, Bitcoin moves about 3 to 4x what the stock market does. So if you drop 10% on the stock market, it could be a 30% drop on Bitcoin. And again, at some point we know that's going to happen. The question is, where is Bitcoin at that time? Is it already up a huge amount before that pullback comes in? We'll find out. Okay. Last couple charts I just want to go over here with you guys is let's look at natural gas, which was early in the morning pushing higher here. It has reversed. Remember, I do have my short dollar cost average. I was going to add again if it got up here, but as of now, it looks like it's stalling out. But again, we have a 55% move up in natural gas, and now it's starting to stall. Still could go up here early next week, so save a little bit. At least for me, I'm saving a little bit of dry powder just in case I need to add to my short up there, just bringing my dollar cost average in right here. And then really when it does pull back, you get pretty big pullbacks on the chart of nat gas. And again, we'll follow that. In terms of big movers today, the China stocks are having an impressive move. I wanted to show you this chart that I have here on the Hang Seng market. Bear with me. I want to make sure I find the correct one. If we go to our weekly chart here, take a look at this. In fact, we can do it on the daily chart. This massive move up. I mean, huge, huge move. But look at this. If we do a parallel, we select our parallel tool, and we connect the lows, right? We connect these two lows, which is slightly upsloping, and then we drag a trend line up here. Look at this, guys. If we extend this out right here, look at this, right to there, right in that zone. So we basically have a parallel from high pivot to high pivot to high pivot, and we're just about there, which means there could be a little bit of upside initially on on Sunday night here in the U.S. It would be Monday morning in Hong Kong, but a little bit more upside, and then that should be a massive pullback. And I'm going to continue to slowly inch into shorts here. And you guys know I was so bullish on China in the near term about a month ago, but now I've switched and said, listen, it's just going too much, too fast. Doesn't mean I hate China. It doesn't mean anything like that. In fact, I think a lot of these charts will be good buying opportunities on pullbacks, but I'm going to play both sides. Right, if I can make money on the long side, then the short side, and then go back on the long side, I'm going to do it, and that's what a good swing trader does. But the key, again, is a good swing trader follows the charts and lets them decide when we enter, versus many investors decide when they want to enter and then look for reasons to make that so in the charts. Don't do that. That's a major fumble there for investors and traders. Let the charts tell you. That's why we have factors in the methodology. You know, whether it's a price pattern or time factor, you need at least 2 of those to trigger about a 75 to 80% success rate trade. And that's really what you're aiming for. You get to 80% Hall of Fame all day long. Just be consistent on that win rate by following methodology like what I teach in the Winning Traders series. All right, guys, I've got to get going here. Lots of action here this morning. Thank you so much for tuning in. Let's trade it away, and I'll see you Monday. Take care.